Welcome to Investors Insights. Our topic today is the Year of the Pig. The reason we chose that, if you're familiar with Chinese horoscopes, this is the Year of the Pig for the Chinese. It's also a year ending in 9, and historically, from a point of years ending in 9 for the Chinese, they really don't like these years. And the reason I'm talking about this is Tiananmen Square took place in 1989. Well, as we're filming this vlog, currently right now, Hong Kong is having major disruption in their airport with protesters and what's taking place between Hong Kong, which is a part of China. And so there's a lot of volatility in the markets. The other reason we chose the Year of the Pig is that in our industry, we have a saying is that bulls win, bears win, but hogs get slaughtered. And the reason we're saying that is that we've had a very strong market with a lot of volatility. And we're getting ready to see more volatility in the months of August and September as we continue to analyze the China-U.S. tariffs trade war, as well as from the standpoint of what's taking place politically in China. Now, there will be a lot of comments, tension made about how this impacts us and our economy in the United States and impacts our markets. That said, you need to understand, too, there will be those that saying, wait, the Chinese own a lot of our debt. It's around a little bit over $1 trillion, and that they could turn around and start selling that. Well, the point we want to make here today is chances are really very slim because, first of all, the United States is paying some very good rates on their U.S. debt. Number two, China would take a huge loss, which they don't want to do in terms of what they own in U.S. debt. And then the other thing is that we have a lot of trading partners that are far stronger with us in terms of Mexico and Canada. And then you start looking at Brazil. And then from there, depending on what takes place with Brexit. And we're going to cover all this here in this vlog today. So the focus with the media and the volatility in the markets will be this U.S.-China trade wars, along with what's taking place in Hong Kong and how that could disrupt the negotiations that are taking place. We're saying remain calm. August and September may be volatile, but at the same time, we've got a lot of positive news going on in this country. Also, though, while everybody's focusing on U.S.-China relations, we also need to be looking at Europe. Ashley, you brought this up. Talk about Germany for just a minute.
Oh, it's the German economy. We mentioned about 3 weeks ago that we had our eye on that, and now that some of the data is coming out, I think we were right to do that, candidly. The German economy contracted about 5.2% year over year, June to June. That's a major pullback for an economy like that. But Greg, Adam, and I were talking about this morning. It's not just Germany now. The UK, as Greg mentioned with Brexit, it's contracting about 0.8%, not nearly as much, but it's still going the wrong way. If you look at France, they've made a lot of labor union progress, but they're still very flatline in terms of growth. And then Italy has had a tremendous fall off in their manufacturing sector. So the fall for Europe could be very difficult in combination of what's just going on in the economy, a lot of elections coming up, and it reminds us 2009, 2010, 2011 on the vlogs, where it seems like we were talking about Europe all the time. So you can't be so focused on the Far East. Europe in the fall could be a real problem area, is really becoming that way.
Yeah, very, very much so. And just talk briefly, because Germany, if I go in and put my money, deposit my money into a German bank, and if I also buy German bonds,
you're not getting a positive return. So
negative.
Absolutely, it's negative. A lot of these markets are favored how cash is flowing.
Yeah.
So cash is going to flow to U.S. markets regardless, even if the trade war is down, because you can't earn anything over there in a German bank.
So the point we're making is if you're Chinese or in Asia, you're wanting to buy U.S. government debt because it's safer and all the controversy that's taking place over in the Far East. At the same time, from the standpoint of Europe, Europe, if you're a European investor, you're looking at U.S. debt as well in our markets and the innovation and growth that's taking
We're
place.
still returning something.
Now, on that note, because we got into the debate there, Adam, you talked about the consumer in this country and what's taking place. So we want you to understand there's a lot of negative news as viewers here, but in terms of the U.S., what's going on?
Yeah, definitely. You talked about China. I mean, the Hong Kong airport is the 8th busiest in the world, and they have actually delayed flights from going out for the remainder of the day. That's a big deal. So let's bring that back domestically. One thing that's really been our saving grace is the consumer. We've been talking about it for weeks now. I know you've been hearing it if you've been watching our vlogs, but you know, the U.S. consumer is really saving our economy, and some economists even think it's keeping bond yields down from going negative. The top 25 banks are seeing around a 12% year-over-year advance in consumer credit. Now, that's still showing a strong consumer in our economy. This week, we have a plethora of consumer reports coming out. That's including the CPI. You know, that's something that the Fed looks at from an inflation standpoint. We also have household debt, consumer price index coming out on Tuesday, as well as weekly jobless claims, retail sales, and we have consumer sentiment index. So these are things we've been tracking over the last couple of weeks to see if the strong consumer trend will continue.
Yeah, and so a lot of positive news in this country.
Exactly.
So on that note, we appreciate you taking time out of your busy schedule to watch this vlog, to forward it to others, to share our thoughts and ideas. We greatly appreciate that, but you can see we're of the opinion that within the United States, we still have growth ahead of us, job opportunities, innovation still moving forward as we see the rest of the world having some major issues and controversy. It causes volatility in the market, but we believe that this too shall pass as we move forward. And we're going to keep you updated because things can change, but at this point in time, don't get focused on so much of the volatility in the market. Remember at the facts, the figures that back it up. That's what makes the difference. Have a great week, and we'll keep you updated.